At 21, you start your own business. How did you get from doing it yourself to all of a sudden having a whole bunch of people that started doing it with you?
I always wanted to be like my dad. My dad was my hero growing up. He used to go up and down the hollers selling insurance to people. There was this world where my dad lived inside of the American dream, hard work, serving others, no one owes you anything. Then we'd go back to West Virginia. We'd go stay with my grandpa. And my grandpa always felt like a victim. He had a very dark view of America. If I had asked him specifically, do you believe in the American dream? He would have said, no, it's the American nightmare. So I took my dad's viewpoint. I got a degree in finance and a degree in accounting. And I started out at 21 years old, working for a large broker dealer, trying to help people do their financial plans. If you're smart enough, you might be able to find the best stocks for your clients so you could pick stocks. If you don't think you're smart enough, maybe you're smart enough to try to predict the market. Is it going up? Is it going down? You have all these active managers and they've beaten the market 20 years in a row and it looks like they're just geniuses. But I felt suspicious. I'm like, how does anybody really know all that information about what the best stocks are going to be in advance? And if they did, why would they share it with you for only 1%? I'm looking at all these managers that beat the market for 20 years and they're underperforming the market by 3%, 5%, 10%. 3/4 of the managers aren't even getting a market rate of return. And I went to one of the broker-dealer conventions and I asked the president of the broker-dealer, this is broken. What are you going to do about it? We're lying to people and we're hurting people. And you know what he said to me? He said, what do you care? That's a payday for you. And I thought, I can't do this. I cannot spend 30 years of my life lying to people, deceiving people to make money off of people. I slid in my resignation. I said, I'm done. I'm out. I had $30,000 in debt on 3 credit cards. I had an overhead projector and had a yellow pad. And that was it. And I started my own firm.
I was fortunate enough today to sit down with Mark Matson, one of the best wealth management investing professionals in the world. And I was excited because I just had so many questions that I wanted answers to that I think we all want to know. Tell me straight, speak straight about hedge funds. What's going on there? How are people making money in the stock market? Is it insider trading? Who's using AI? What's happening? And I got answers. It was not what I was expecting, but fascinating. You guys are really going to enjoy my conversation with Mark. Boundary Breakers is brought to you by Carter & Clark. Mark, thank you so much again for joining us. Tell us a little bit about your background, sort of who are you, kind of where you came from, your origin story, I guess, as some people like to say.
Yeah, well, where I am today, to put it in context, I own a company. It's called Matson Money. We manage $13.3 billion for investors all over the United States. I have roughly 500 financial advisors I work with that are all independent that work with us. I spend a lot of my time training and developing people. I wrote a book called Experiencing the American Dream, which is a 6 times national bestseller. And then I created a 2-day workshop called the American Dream Experience. And then we have people coming from all over the country to Scottsdale, Arizona. We just had one last week in February. It's really nice to be here. And it was a lot of fun. We teach people about what speculating with their money looks like, what gambling looks like, what prudent investing looks like. We help them break the no-talk rule that they might have gotten from their family, help them develop a true purpose for money around what is their real purpose, not just for sake of having a bigger portfolio. So my background was that I always wanted to be like my dad. My dad was my hero growing up. He used to go up and down the hollers. We came from West Virginia, Charleston, West Virginia, up in the hills. And he used to go up and down the hills selling insurance to people. And then he would tell me every summer, eventually we moved out of West Virginia to Cincinnati. And once a year we'd get in the station wagon, we'd drive back to Cincinnati, and from Cincinnati to West Virginia. And I'd be like, and it was like 2 different worlds. I mean, there was this world where my dad lived inside of the American dream. He taught it to me, where hard work, serving others, independence, no one owes you anything that you don't create for yourself. And that creating your family, how critically important the family unit was, and living your dream based on the freedoms that we have in this country. And he taught me to be very patriotic. And then we'd go back to West Virginia. And then I'd see all the massive poverty. And we'd go stay with my grandpa. And he lived in a broken down house. He spent a lot of his life working in the coal mines, and then he also worked at a chemical factory for many years, 25 years in the chemical factory. And I got to see the difference of 2 different worlds of way that people see things. And my grandpa always felt like a victim. He always felt that he was entitled to things that he didn't create. He felt that anybody that had money or wealth or prosperity had stolen it or took it from others. And he had a very dark view of America. I'm sure if I had asked him specifically when I was 10, do you believe in the American dream? He would have said, no, it's the American nightmare. So I got to see these two very different ways of looking at the world. And I got to see the difference that it made on the quality of life, the ability to create value for others, the ability to create a company, be an entrepreneur. So I took my dad's viewpoint. I got a degree in finance and a degree in accounting. I wanted to be a financial planner like him. And I started out at 21 years old, applying my degrees, working for a large broker dealer and a large insurance company, trying to help people do their financial plans. And that's kind of the story. We came from the hollers. We made it out of there. Today, I have 80 employees managing over $13 billion. And I know that screen that my dad gave me about how no one owes you anything, except he said shit, actually. No one owes you shit. And you have to create it, and you have to create value for others first. And he said, if you want your American dream, you'll have to focus on one thing, helping other people create theirs. And with that mindset, he set me on a journey to eventually start my own company when I was 21, break a lot of the industry norms to create the company that I have today.
I love it. And I want to get into, look, there's a big difference between being a highly successful financial manager or you performing or executing or being a world-class in wealth management compared to building a world-class wealth management company, right? Which, I'm sure you know all about. I love to talk about some of those nuances, but something that stood out to me when you're talking about that is the stark contrast in attitudes between your grandfather and your dad. And I too have noticed, probably haven't been able to put it as artfully as you just did, but there are very I find that frequently most adults sort of fall on one side or the other, right? Most adults in the US, they either feel that, life is something that happens to them and it's a result of the cards that they were dealt, and, they just weren't dealt the right cards, but everybody else has them. And then the others feel like life is what you make it. And if you're in a bad spot, it's because something that you probably did yourself and you can get out of it. What do you think causes people to go to sort of one extreme or the other?
Yeah, that's a great question. I've thought a lot about that. One, I was really lucky. I was lucky to have such a good teacher in my dad that not only, espoused the values of the American dream and how great this country was. He'd say, look, you live in the greatest country that's ever existed on the face of the earth at the greatest time to ever be alive on the face of the earth. And if you can't be happy in America, you can't be happy, period. You're never going to be happy. There's nothing that can satisfy you because you're not grateful for what you have. And so he really taught me just the value of living here and the freedoms that we have versus other places. And that's a screen. That's a way to see the world. Screens are neither good nor bad, but screens will either empower you or disempower you to take actions. So I'll give you an example. And one time I had a really bad screen. And as a human being, we're one of the few, to my knowledge, the only species on the planet that can actually think about how they think. And it's so easy to fall into victimization. And it's so easy to see it in other people, where sometimes it's really hard to see it in ourselves. So when I was 32, I had a disease called osteonecrosis, and my hips were basically just falling apart. They were I had blood clots in my hips, and I was losing them. And I had been a lifelong cyclist and had little kids at the time. And I started thinking in my mind when I was diagnosed, and there's no cure, what they were going to have to do is replace my hips when I was 34. And what went through my mind is, why me? Why me? Why does this happen to me? And I really went into a dark period of time where I was self-pity, and then I went to see a blood specialist, and in the blood specialist office, there were 10 children who were all getting treatment for blood cancer, and they were all hooked up to IVs. And they were laughing, coloring, playing with little cars, and they're facing life or death.
Yeah.
And I'm thinking, And I switched that question from why me to why not me. I'm like, you selfish asshole. How can you look at those poor little children who are facing death and they're playing with their cars and they're having a good time and they're making the best of what life they have, and you are just feeling sorry for yourself? Why not you? You don't get to live a life without pain or without suffering or without challenges. And I switched the screen just like that. And I think people that get caught in that why me? Why am I poor? Why am I born in the Hullers? Why wasn't my dad rich? Why wasn't I given opportunities? Why can't people see how brilliant I am? Why can't I get my YouTube account, to 500 million viewers? I mean, whatever self-pity is a delicious elixir that many people love to drink, because then they can get other people feeling sorry for them. They can complain. They can blame other people for their lack of success. And I think it's like a drug. And once you start getting on that drug and you start sucking into what it does is it allows you to not have to take risk in life. And you can blame it on other people. And it's not my performance, the way the thinking goes. It's your problem. You're the ones keeping me down. And in this country, the opposite of the American dream is victimization and entitlement. And whether or not, and what I tell people is, I don't care which one you really believe, but I can tell you this: one can give you an extraordinary, amazing life full of adventure and love and connection, and one will give you only a life of misery and pain and suffering. So choose your screens carefully, because they will define you. And I'm sure, and believe me, I still have my days of, self-pity and, victimization, whatever, especially when I go to pay my taxes every year. It's not fair. It's not fair. Why they take so much money? Well, if I'd been born in Russia, I wouldn't have a company at all. They'd be taking all of it, and I'd be probably, a soldier in Ukraine fighting a battle, hurting people. So how does it happen? I'm not really sure. I'm not sure if it's the messages that you're given and lessons you're taught or the experiences you have, or is it something in your DNA? I read just this morning that there are 400 personality markers in your genes of how you look at the world and how you see things. So I'm sure it's a combination of your life experiences and how you're put together genetically. All I know is, man, I'm just so glad I don't have to stay in that victimization screen any more than I do.
Yeah. Amen. And look, I think you hit it on the head. I think about this a lot. And I think that my personal opinion is that getting into that sort of victimization mindset is kind of the natural course of things. It's where life wants to push you, because life isn't easy and it isn't all rainbows and butterflies every day. And so the natural tendency is to get stuck in that rut. And I think that there are two real ways to sort of get out of that. One that you mentioned, which is, see somebody else and what they're going through, and all of a sudden your perspective changes. Holy cow, mine's not so bad. And another that I spend a lot of time thinking about is, nothing beautiful on this planet has ever come without some type of pain, right? It is a natural product of pain and difficulty. And it's the reason I do this podcast, is because every time I talk to somebody who's highly successful, the story involves some type of struggle or strife or difficulty. Often, the greater or the larger the obstacle, the greater the success, or the more beautiful the story on the other side is. And so I think that it's a difficult place to get, right? But to get to, like you said, why not me? To get to a place where you're going through something that's terrible, that feels like we're never going to get out of it, and that how could this possibly happen? All that really could mean is that whatever is on the backside of it is going to be equivalently amazing. And that at least helps me, is what I try to pass on to my kids, is it's a blessing if you get to go through something difficult, because that means that there's something, if the difficulty is extreme, then you're going to, in the not too distant future, experience some unbelievable beauty with it. And look, your life is a testament to every single person that I talk to that's broken boundaries and has done things, I call it, is sort of standing on the top of the proverbial mountain that they have chosen they don't just walk up and say, oh, yeah, this was fun. It is a long, difficult, arduous journey that typically starts from a period where most people would start thinking forever, why me? Oh, well, I guess I didn't, wasn't born on third base or whatever, like everybody else. So I'm sorry that normally I don't talk this much, but that one hit a chord with me. And I think you're exactly right. So I thank you for sharing all of that. And I'm sorry that you had to go through that at such a young age. So at 21, you start your own business. Were you focused at that point on building a business around other wealth managers, or did you just want to do it and help others yourself? And how did you get from doing it yourself to all of a sudden having a whole bunch of people that started doing it with you?
Well, that is a great question. So after I got my degree in economics and finance, accounting, I went to work with my dad at his financial planning company. And we worked for a big company, Chubb Securities and Chubb Life. Chubb still exists today. And I did what they told me to do. I mean, what do I know? I'm 21 years old. They tell you, here's how you sell insurance. Here's how you do a financial plan. Here's how you invest the money. It was the 80s. There were a lot of partnerships. There were crashes. There were all kinds of, Wall Street, with that movie with Martin Sheen in it. That was in the 80s, right? And there was all kinds of shenanigans going on, and actual lies and robbery and fraud in the investment industry. But here's what I did. I did what they told me. And here's what they basically told me. If you're smart enough, you might be able to find the best stocks for your clients so you could pick stocks. If you don't think you're smart enough, maybe you're smart enough to try to predict the market. Is it going up? Is it going down? And then you can get them in or out. And I'd go to their conferences and their conventions, and they'd have people like Harry Dent or other people that were supposed to be prognosticators that could predict the future. Or if you don't believe you can do those things, then what you can do is you can get a money manager that manages a mutual fund. So Fidelity or John Templeton at the time, or Pioneer Funds or whatever. So you have all these active managers, and they put them on stage, and they sound brilliant, and they've beaten the market 20 years in a row. And it looks like they're just geniuses, that they just know how to. But I kind of felt suspicious. I'm like, how does anybody really know all that information about what the best stocks are going to be in advance? And if they did, why would they share it with you for only 1%? So it didn't even feel right to begin with. But then I started doing it with my clients' money, because what the hell? I'm just following the orders I'm being told to do. And so I build a pie chart. And then I start this much in growth funds, this one it's much in small funds, this one in, international funds. And then I'd pick the best manager, which anyone could see because I just look it up in Morningstar, for each section. And then I'd get a commission. Back then, the commission rates were around 8%. Now, mostly it's no mutual funds. And it didn't take me long. It's a sad day, right? When you stop believing your own bullshit. And about 3 years in, I'm looking at the performance my clients are getting, and I'm looking at all these managers that beat the market for 20 years, and they're underperforming the market by 3%, 5%, 10%. And clients are coming into me and saying, you built this model for me. I gave you $1 million, and none of these managers, or 3/4 of the managers, aren't even getting a market rate of return. And I went to one of the broker-dealer conventions, and I stood up in a room full of about 500 people and asked the president of the broker-dealer, this is broken. What are you going to do about it? Because we're lying to people. Because these managers who seem so brilliant don't repeat. And we're hurting people. And you know what he said to me? He said, what do you care? Sell them something else and get a new commission. That's a payday for you. And I thought, I can't do this. I cannot spend 30 years of my life lying to people, deceiving people to make money off of people. And then I went to a debate in San Francisco from Donald Yachman. He was the #1 rated money manager, beat the market 15 years in a row. And this other guy I'd never heard before, named Rex Sinquefield, who was an academic from the University of Chicago. And Donald Yachman just babbled on for about 20 minutes about how he beats the market, and none of it made sense. And then Rex Sinquefield got up and said, look, the reason active management doesn't work is because markets are efficient, which is the primary claim of capitalism. Through supply and demand, sets the best price. And he said, there's no market more efficient than the stock market. You have supply and demand. All of the knowable and predictable information is already in the price. Therefore, only random or unpredictable information will change the prices moving forward. And that's why active managers don't repeat. There is zero correlation about a manager's ability to beat the market in the past and repeat it in the future. And when he said that, it was like somebody hit me with a 2x4. I mean, I knew it had to be true. And so all these companies, Fidelity and Vanguard and BlackRock and was Templeton, they got bought out. But all these big mutual fund companies were basically running a con game on people. And they have 1,500 mutual funds, 15 or maybe 100 of them get lucky. And then they advertise those, and they don't advertise the ones that didn't perform. But then there's no persistence in the manager's performance. Zero, absolutely zero, none whatsoever. So I knew stock picking, market timing, and track record investing were all lies. Now, I had a major problem. I was 26 years old, and I knew I could never do that anymore. But I also had a conundrum, which was there was no known business model where you could actually use academic investing principles to maximize people's wealth and eliminate gambling. Some of the large Fortune 500 institutions were doing it with their pension plans. And some of the large charities were using efficient market theory and modern portfolio theory to manage money, but it was unheard of for investors, for individual investors, retail investors. So that's what so in 1991, I left the broker dealer. I handed in my resignation. I actually told them, I said, will you let me do this while I work for you? And they said no. And you're making $300,000 a year at 26. So we know you can't leave. And I said, well, you don't know me. And I slid in my resignation. I said, I'm done. I'm out. This is over. I had $30,000 in debt on 3 credit cards. I had an overhead projector and I had a yellow pad. And that was it. And I started my own firm.
Wow, that's pretty bold. So for those of us not in the industry and have a hard time with a little bit of the jargon,
yeah,
I guess pretend that I'm 10 or 12 and explain to me the difference between sort of the stock picking like the money managers were doing,
yeah,
versus what you figured out the best approach, and how those two differ.
Yeah. So the first thing is you have, I always tell people performance in life is really not that complicated. Everybody wants to make it really complicated. Having elite performance are the actions you take and the actions you eliminate, whether that's a diet, a fitness program, or how you run a business. So first of all, you start with saying no to the things you're not going to do. We're not going to stock pick. We're not going to market time. We're not going to track record invest. Okay, so what are we going to do? Well, that's based on an understanding of where returns come from. Returns don't come from some brilliant manager picking the best stocks for you. They come from the cost of capital. So you got one company that's small and high risk versus one company that's large and established. The smaller company has more risk than the bigger company. So if they're going to attract investors, their stock has to be at a lower price and it has to offer a long-term premium. The premium comes from the risk and the market itself, not from the manager. So when you build your portfolio, if I'm going to have, let's say, 10% in large U.S. stocks, and that's the simplest part of a portfolio, then we're going to have the S&P 500, and we're not going to stock pick, and we're not going to market time, and we're not going to track record invest. We're going to get the market return. And over 10-year periods of time, the market beats 90% of all the active managers, and you're not going to get to know the 10% in advance. If I'm going to put 10% or 20% in small or microcap stocks, then I'm going to own all 2,000 in the U.S. And I'm not going to try to pick and time it. If I'm going to own small international stocks, for example, small international value stocks last year made 52%. But everybody is so busy trying to pick out the Mag 7 here in the U.S. that they miss the whole diversification on a global basis because they're trying to pick and time, when what you want to do is diversify and get the highest expected return. I know this is jargon, for the lowest amount of volatility. That's a concept called modern portfolio theory. So I got to work, my dad always taught me also that, look, you're not going to win a Nobel Prize when it comes to investing. But what you can do is you can go out and get the people that won the Nobel Prize, like Dr. Fama and Dr. Harry Markowitz and others, And then you can get them to help you design portfolios and help you manage money for people, and then have them, maybe even have them on your academic board. So teamwork and coalitions, building your team both inside and outside are very critical skills for entrepreneurs. But it's really hard for people to give up the idea, the illusion, the lie that somebody out there could pick the best stocks, could market time, could get you in and out of the market. And that's why it takes a lot of education and training to first help advisors and then help investors. Because you're not just ginning them up and say, oh, look at this, made 50% last year. This made 100% last year. Buy it. Bitcoin or REITs or whatever.
No, that's interesting. And so you described several differences, but one of them that you mentioned is, and correct me if I state this wrong, but my understanding is that you invest in different markets as opposed to trying to pick individual companies within a particular market.
Yes. Yeah.
Among other things. I'm not. That's a gross oversimplification, but in addition to that, you don't pretend to know when that market that you're investing in is going to be up versus down day to day and all that. But a long term, more. And when I say market, I mean there isn't just one stock market like you mentioned, right? There's a bunch of them. You could it could be S&P or it could be small international companies or what have you. But you're investing in that group of companies, right?
Yeah, that's what 97% of your performance in your portfolio will come from the mix of assets, what asset categories you own, not from what stocks you own in those categories.
Gotcha.
And on average, so first of all, it's not that important which ones you own in the category. Number two is if you try to pick the best ones instead of just owning the category itself, on average, you lose 2 to 3% of your return a year because of the turnover and the cost and the picking. So once you build your mix, and your mix is critical. So when we build a mix, we're in over 27,000 holdings in over 100 countries. So it's massive diversification, and it's daily rebalancing and algorithms to keep everything in to keep your mix balanced. So it sounds easy, but the application of it itself is fairly complex.
Well, that's what I was going to say. Is that I mean, it probably sounded insulting how grossly.
No, it didn't. No, not at all. No.
How much I simplified it, but that was sort of with my little pea brain. Like I could only sort of like zone in on one of the particular differences at a time, and that was the big one that I picked up on. But so I gotta ask, talk to me about hedge funds. And what is it that they're doing to cheat? Because they clearly, I mean, I don't know, but what I surmise is that there's some advantage that they have, whether it's that once you have X tens of millions, you can manipulate things. How do they so routinely provide such unbelievable returns?
Okay, great question. Okay, they're masters of illusion. So if you're running a hedge fund, normally you're not running just one hedge fund. You're running 10 hedge funds. And one makes a bet on real estate. One makes a bet on gold. One makes a bet on Bitcoin. One makes a bet on technology stocks. One makes a bet. So you got these funds that you're a hedge fund manager, and you're managing these hedge funds. And you know in advance you're going to be wrong a lot. Now, you're not going to advertise the returns of the ones where you were wrong. You're only going to advertise the ones where you got lucky. So a hedge fund manager, and usually there's massive amount of risk because they usually use leverage. So they're using leverage. They're charging you 2%. 2% a year and 20% of your gains to the extent that you have gains. So even though that sounds like a lot, and it is, if they really knew how to do what they say, Tony Robbins talked about this in his book. He said, if you want to be a billionaire, invest like a billionaire. That's the biggest bunch of BS I've ever heard. You know how many billionaires that tried to invest like a billionaire lost everything and went completely bankrupt? If you want to become a billionaire, do not invest like a billionaire. That's absolutely insane.
What does invest like a billionaire mean?
It means private equity, private credit, buy baseball teams, buy shares in baseball teams, all these speculative hedge funds, all these things that, and that's all speculating and gambling. And if that manager that's managing that hedge fund knew how to make 20% rate of return per year, using common sense, would they sell it to anyone for 2 and 20? Or would they just borrow money from the bank at 7% and keep it all for themselves? And
That's a fair point.
It's gambling on steroids. It's the worst possible thing. Now, what it does do is feed people's ego.
Yeah.
So you go to the country club, and instead of saying I'm rich, you after you drive up in your Bentley or your Rolls, you brag at, after you finish your round of golf. Well, I have this hedge fund and I have that hedge fund, and that's prideful. It's arrogant. It's bragging to other people. And if those, look at Kathy Woods. Most recently, she was supposed to be this genius stock picker, hedge fund manager in the area of tech stocks, and she just lost people $14 billion. And she's gambling and speculating with her money, the ARK funds.
Oh, I saw that.
Yeah. So
she says Bitcoin's going to 1.5 million. That's
yeah. Well, don't get me started on Bitcoin. So it's kind of like saying, well, wait a minute. If the lottery doesn't work, then how does anybody ever win it? Well, yeah, somebody's going to get rich in the lottery, but it's gambling. And if you won $1 million in the lottery, the worst possible thing you could do is double down and then invest in and let it ride and go buy another $1 million in tickets. Right?
I always said that, to me, the lottery seems to be a tax on the uneducated, but that's a whole nother.
well, it definitely is. But the hedge funds are a tax on the educated. And the more educated you are and think that you're sophisticated, you know who is the easiest to take advantage of? People who think they're sophisticated. But because look at Madoff's victims, all people, Hollywood, elites, academics, even charities, Fortune 500 pension plans, $68 billion of fraud.
No, you're right. You're right. And as soon as it came out of my mouth, I wanted to grab it, put it back in. As soon as I said that the lottery's a tax on uneducated, because I said that came across as so elitist and snotty, not the way that it was intended. But I think you're right. I think that. Oh no. I wasn't, and I'm not trying to say that you said that. I just was thinking to myself, like, what an idiot thing, what a dumb thing to say.
I'm not sure it was an inaccurate statement you made.
Yeah, but your point is well received. Is like, yeah, maybe, but it's happening at 10 or 100x the scale with things like hedge funds or other elite investing like a billionaire, as you said. So I want to make sure that I get this. So are you saying that the famous billionaire hedge fund managers would invest in 10 or 20 or 100 different funds, and one of them, or maybe two, or some percentage of them would do well, which would mask the returns on the other ones, and then they would tout how great the one or two are? But that's do the odds work out like that? I mean, so the returns come, because what about the losses for the other ones?
They don't care. They're going to shut those down. They'll shut the ones down that didn't make money. They'll pretend they did. Mutual funds do the same thing. So if you're a mutual fund company, Fidelity has 1,400 mutual funds. If Fidelity knew who the best manager was, wouldn't they just have one fund? And if that manager knew what the best stock was, wouldn't they just have one stock? The fact that they have 1,400 funds tells you that they have no idea. Templeton can't even find the next Peter Lynch. So if you're trying to find skill from luck, and this is what most people miss, is that just by pure blind random luck, if you have 1,000 people trying to beat the market over a 40-year period, some of them, through luck, you would expect to earn 3 to 6% over the market rate of return.
Sure.
And those are the ones that you hear about. And the ones that got unlucky and underperformed the market by 4 to 6%, they close those funds down and they roll that money into whoever got lucky.
Gotcha.
But no matter how many times you got lucky, that doesn't give you any correlation about your ability to continue to be lucky in the future. And that's how they scam people.
It's the same thing. So hedge funds, mutual funds, same thing, but just a couple more zeros.
Couple more zeros and much more expensive for the hedge fund.
for the investor.
Right. Oh, it's good. It's good money for the most of these guys that run hedge funds make most of their money from the fees that they charge, not from the fact that they Some of them are billionaire investors, but a lot of them made their money from the fees in the funds.
From the 2, not the 20.
The two or the 20. But it doesn't matter if I'm charging 2, that's an insanely high fee. It's massive. To just overcome that 2% fee versus the market takes a genius just to break even.
Well, I've always wondered, and I don't know, right? It's not like I've done a whole bunch of research. I mean, I love this because I'm being educated here. I've always asked myself the question, well, if they're getting all these crazy returns, what's the 2 for? If they know that, oh, we beat the market by 70%. Well, what's wrong with the 20 that you're getting every year that you're like, what downside risk are you guarding against? I guess is my sort of rhetorical question. But yeah, that's fascinating. It's the so hedge funds are sort of the elite / hyper wealthy mutual fund.
They are on steroids, and there are a lot of toxic investment vehicles. You mentioned cryptocurrency. That's another one. Extremely toxic.
Tell me about that. What's going on with that? What do you think's happening? Why are so many people getting into it? And where do you see it going?
Well, just a couple basics on it. Number one, they call it currency. It's not currency. Currency has to be a currency, it has to be fairly stable. Now, the dollar, yeah, we have inflation, 2-3% inflation. Historically, it's been, in modern history, it's been as high as 13-14% inflation. So that's a devaluation of the dollar. But you can lose 60% in Bitcoin in a month. So it's not stable. So you have this, it can never function as a currency, because to be a currency, you have to be relatively stable. So it's not a currency. It's not universally traded. Try to go to the mall and try to pay with Bitcoin. They're not going to take it. So it's not universally traded. It's not stable. It's not a currency. And to make all that even worse, it's not backed by anything. So if I go and I buy a stock, I'm getting part ownership in that company. The products, the factories, the intellectual property, the patents. So I own something. If I buy a bond, then I'm still buying a promise from the company or the government or governments that they're going to pay me back, and there's real assets and real things backing that up. On Bitcoin, there's nothing. On any crypto. And for every Bitcoin, there's 10. There's 20,000 cryptocurrencies out there, 20,000. The vast majority of them went under almost immediately and never made a single dime. So hindsight bias makes you think that, well, Bitcoin's the one. Well, yeah, but that's in hindsight. Nobody knew when it was created that out of the 20,000, that was going to be the one that got lucky.
It seems to me like on that point, there's got to be a huge scarcity problem with Bitcoin or cryptocurrencies. There's 20,000. The barrier to entry is essentially negligible,
right?
And so, why? How do you know? Like, there's no. In other words, there's unlimited potential supply. So how can there be a true supply and demand curve if another one just pops up right behind it?
You're exactly right. The only thing that gives it value is what P.T. Barnum said: there's a sucker born every minute. And there's always for you to make any money, there has to be somebody that thinks that something that actually has no backing and is highly volatile is actually worth more than what you paid for it. It's one of the most toxic things you could do. And then the final thing to that is it takes 70 years plus of data to know the nature of an asset category. So until there's 70 years of data on crypto, you don't know the volatility, you don't know the standard deviation, you don't know the expected return, and so that's the academic studies that won the Nobel Prize will tell you that. And some people will say, well, what about Buffett? Isn't he's the guy that beat it? Well, yeah, but you need 70 years of data. And by the time you get 70 years of data on the guy, even at a 2%, if he beats the market by 2% over 70 years, that can still be luck. And so it's a loser's game. You're better off not to play it.
Yeah. And I would even say, to me, what Warren Buffett did was more akin to private equity than like market investing, right? Like trading or picking stocks. He actually went and dug deep into these businesses to find, but anyway, just my opinion.
Yeah. Sure.
Just one more thing on the crypto thing, because I find it fascinating, and I apologize for interrupting. But
No.
So what do you say? You said that it's not backed by anything. What do you say to those that respond and say, well, the dollar isn't backed by anything either? It used to be backed by gold. It's not backed by anything either. So how's a dollar any different than
It's
my
backed
Bitcoin?
by the ability of the U.S. government to tax your ass.
Yeah. That's what I thought you were going to say. Is at least it's backed by the federal government, by the U.S. federal government,
and
right?
They have the rule of law, which says they can tax you. And when they tax you, they use that to run the government. And I'm not saying the dollar's perfect.
Right.
There's a lot of problems with the dollar, but it's the most stable currency in the world. Sure. And 1,000 times more stable than cryptocurrencies.
Yeah. There is no federal Bitcoin government that has promised to back your Bitcoin, right?
No. Well, it's mainly used, really. The people that use it the most are usually criminals. You've got cartels that use it. If someone breaks into your computer system and hacks you and shuts your system down and says, we stole your data, so they're ransoming your data, they'll pay to crypto because you can't track it. And they'll say, pay me $1 million in crypto, and they're in Russia or Ukraine or wherever the hell they are. And they're like, send me the money or I'm shutting your system down and I'm going to publish all your data. You want to be buying something that's mainly backed by criminals? I mean, I don't get it. People are, but it goes back to a basic human principle, and that is magical thinking. Investing and doing it prudently takes a lot of thought. And human beings have emotions and instincts and biases. Hindsight bias is one. Well, yeah, but this hedge fund made this. Well, yeah, but that's in hindsight. If you had known it beforehand, you would have mortgaged your house and put all your money in it. So you didn't know in advance. No one knew in advance. You only knew after the fact. And that's one perception, bad perception that people have. Survivorship bias, you only see the winners. Recency bias, you only look at the last 2 or 3 years of data. Familiarity bias, you like to buy the things everybody's talking about that's on the news. And there are over 180 biases in the human brain. 95% of all your decisions are not made from your cognitive part of your brain, your conscious part. They're made by the subconscious. And then the conscious part of the brain tries to justify why you ate that extra cheesecake and didn't get up and work out in the gym the next morning. Human beings are fascinating. So you also have to understand, if you're going to be a successful investor long term, you got to understand markets and portfolios and the science that goes into that. But you also have to understand your own brain and how your brain works, how your emotions, your instincts, and your biases work, because those are always going to be fighting against you. If I gave you the perfect portfolio today and said, based on your risk return preference, this is the mix, now you got to stay disciplined for 30 years to see how it works out. The vast majority of advisors and especially investors will never be able to do it because of the noise and because of the discipline that it takes.
Yeah. So it's really interesting, your philosophy. I mean, what I'm not trying to pretend like I'm an expert on what you're doing, but what I hear, what it makes me think about is just a principle that, look, you can deploy the proverbial you can deploy capital in a way that produces returns because it's valuable, and deploying that capital in wise ways can get you a steady return that people will be generally happy with over a long period of time. However, what you cannot do is play the lottery or go pick a winner here or pick a winner there, because basically the universe is against you, for the simplest, most layperson way to say it. Like the house always wins.
Yeah. Well, the house does. It absolutely wins, because once you get to the fact that all the knowable information is already in the price,
Right.
Then you get to the realization that the only thing that's going to change the price is the future,
which is luck, because you don't know anything,
which is unknowable.
Right.
And if someone did know, they wouldn't tell you. It's like going
they would tell their congressman or senator.
Yeah. And they would be making billions and billions and billions and billions. They'd be richer than Bill Gates and Elon Musk and all these guys combined. They would be bigger than all of them, because there's always something making 1,000,000% a year. There's stocks that are making over the last 12 months 19 million%. Well, if anybody really knew, they would never tell you, and they would be insanely rich. But another point that people miss is that, and I teach this in my class, is that even if you knew, you wouldn't be happy. If your job was to try to predict the future, pick stocks, time markets, get in and out, you'd be constantly glued to your TV. You'd be constantly glued to your phone. You'd be constantly speculating and gambling. And the reality is that money, even if you made $1 billion, money doesn't make you happy. And I learned this when I was about 28 years old. I had one client with $5 million and another client with $500,000. And the $5 million client was absolutely miserable. They lived in total fear, total anxiety. They didn't like their kids. They didn't have any relationships, afraid their attorneys were going to steal the money, afraid the market was going to crash, just terrified of everything. And as a result, they were mean. They were hateful and angry and resentful, and that money didn't help her at all. And my client with $500,000, she was delightful. She had charities. She had great grandkids she loved. She had great relationships with her kids. She had great relationship with God. She lived a delightful, wonderful existence. She had the American dream. And I thought, wait a minute, if I'm a money manager and I'm trying to help people make more money and get their portfolios to grow, but it's not going to bring them any happiness or satisfaction, then I could live a whole life. I could get rich, but be just as miserable as some of my richest clients. And when you look at history, it's easy to see people like Elvis, people like Marilyn Monroe, people like Howard Hughes, people like Prince. These people, money, fame, power, everything. And it's never enough. So what does make you happy, can make you happy, is having a purpose in life that's bigger than money. And if you can, and then it becomes really clear that if I have a purpose for life that's greater than money, then I don't ever want to speculate and gamble with it, because I don't want to violate and hurt my purpose. And most people never consider or think about what their true purpose for money is, because they get sucked into gambling and speculating with it.
So I've got to point out that it is remarkable and I don't want to insult you by naming what you do, wealth management or anything like that. So correct me if you need to, right? But for someone who has constructed their entire career around wealth management, to say money doesn't make you happy
Yeah.
is remarkable. It really is. That's I just think that needs to be pointed out, because it's unusual. Most would tell you, what do you mean? What is the old joke? What do you mean? You ever seen somebody, frowning while riding their jet ski? Of course, money makes you happy, especially the wealth management folks. So I just think it's refreshing and really, really cool that you come out and say that.
Yeah, it is really hard. I've tried it, to frown when you're riding a jet ski.
Oh yeah, yeah. I say that. I think that was Dave Chappelle. I say that because whenever this topic comes up, money doesn't. First of all, I totally and 1,000% agree. But I hear Dave Chappelle saying that in my mind, and then I also, the next thought in my mind is, well, that's like failure to differentiate between, like happiness in the moment and fulfillment or joy, which as you know very well is very different than, fleeting, quote unquote happiness because you got a birthday cake or you're riding a jet ski or what have you. So
yeah, fulfillment. And so I had to do a lot of thinking about that. I'm like, well, if you won $100 million, if you won $100 million, are you saying that it wouldn't make me happy if I won $100 million? And there's been studies done of people that won the lottery, hundreds of millions of dollars, and people that lost their legs. And 6 months to a year out, there's no reported difference in happiness. So then I had to think, well, why doesn't it make you happy? And it's because of the vicious spiral of wealth. So you have this drive to survive and thrive. And you do need certain things to survive. You need food, water, shelter, clothing, things like that. But most people, then you go out and you achieve something. You get that new house, you get that new car, you get that your company goes to this value, you make this amount of money, your portfolio grows. And for a minute, it feels really good. Toyota had a commercial, oh, what a feeling, when you buy a Toyota. And it does feel good to get that Ferrari. It does feel good initially. And you feel that adrenaline and maybe even a sense of satisfaction that you worked hard enough to get it. But then you're driving that Ferrari or you're driving that boat, and then you're looking. I remember I had a 37-foot Yamaha triple Yamaha center console boat. I had a house in Florida, and this 250-foot yacht goes by, and I didn't get triggered by the 250-foot yacht. I loved my boat, but I noticed that the tender for the yacht was bigger than my boat. And I was like, you know what? I need a bigger boat. And the joy I was getting from owning that boat was diminished. So we're always comparing. So whether it's technology, I got to get the new cell phone. Oh, if it's golf, I got to get the new bubble driver, $1,000. Or if it's a purse, or if it's clothing, if it's a house, I bought the house. I thought the house was perfect. But then, oh my gosh, I can't live with this kitchen anymore. I need to rip it out and get a new one. And so it's temporary and it's fleeting and it's not real and it doesn't last. And I'm not an enemy of material things. But I do have to acknowledge for myself and my kids and everybody here at the company that money itself is not going to make you happy. Having a purpose in life that's greater than money, that's fulfilling, then you can use money in a more powerful way. And then the money can really help you elevate your purpose in life. And for mine, it's helping people find their purpose and fulfilling their American dream. And so that's what I try to focus on.
I love that. And okay, for what it's worth, it's been proven. It's not disputable that your conclusion. I totally agree that money can't just money in and of itself cannot create long-term happiness or fulfillment.
I always tell people I've been poor and happy, and I've been rich and miserable. So I know.
Yeah.
So I know
I love that.
Some of the worst days in your life are when you get what you want, you get that big company, you get that big house, you get this big thing, and then you end up in all kinds of mess around it, all kinds of maybe legal issues or arguments or conflict. And so getting what you want and having a lot of money, take it from me, does not mean you're going to have a great life.
Yeah. It's the dog that finally catches the car, Well, so I love all of this, and I love your outlook and your energy and your attitude and sort of your whole sort of mantra, if you will, personally and professionally. I want to switch gears and ask your thoughts about this whole AI business. I know it's the buzzword. It's now a cliche. Everything AI this, AI that. As it relates to deploying capital and having a wise outlook or plan with capital, how do you think, let me ask it in two ways. How is AI making a difference now? And if so, how? And then what do you see coming with it in the future?
Well, obviously it's making, I'm no expert on AI. I have some opinions and some thoughts as an entrepreneur. I think it's a threat to everybody's business. Nobody knows who's going to win. That's one of the fun. Everybody loves capitalism when they're winning, but capitalism provides for evolution and extinction. Companies come, they go. Even huge ones you think are impossible to go, they end up folding. Companies like Kodak, that everybody had 95% of the camera and chemical market and the photo market. Blockbuster, Netflix tried to sell them, offered for $50 million to sell themselves to Blockbuster. The CEO of Blockbuster said, no, that's never going to work. Your industry's dead. And of course, there's no Blockbusters now. They had 1,500 stores. So my thinking as an entrepreneur is you're never safe. And no matter what you did yesterday to create success, does not entitle you to success tomorrow. So that's an overall mindset. And I think a lot of entrepreneurs, especially their 50s, 60s, 70s, maybe even, get that thing, well, I did this for 30 years, or I did this for 40 years, I built this, so what? The question is, what are you going to bring to the world that is unimaginable? And I tell people, what you're going to have to do with AI is you're going to have to create things that are unimaginable. Like when Disney created Snow White, and no one thought a full-length cartoon would ever make any money or ever actually work at all. And when he made Disneyland, even his wife said, "You're an idiot. You're going to bankrupt us. This is never going to work." So you're as an entrepreneur, you're always creating things that people can't even imagine needing or using. And that's what makes entrepreneurism tough. In my industry, the way I think it's going to work is we got to use AI. My production department made a video. We priced it out. We made it in a week. It's a music video called The American Dream. And it would have cost us over $1 million in 6 months to shoot if we had made it with traditional technology. And we did it in a week. And it is a badass video.
Mm-hmm.
And it's incredible. So you're going to have to use AI, no matter what business you're in. And then you're going to have to do something. You're going to have to provide value for people that goes beyond what AI can do that only a human can do. So for example, AI, if you said, build me a portfolio, here's my existing portfolio, build me a better portfolio. It could spit out a model, a pie chart, and say, here's your new portfolio. Now, the thing that's really interesting about AI is first you ask AI a question, a prompt, and then, this is the devious part about it, then AI asks you a question. And so before you know it, you're actually having a conversation with AI. And it will say, would you like a different model? Would you like a different custodian? Would you like to change your accountant? Would you like to change your financial planner? Would you like to change your mortgage broker? Or whatever it is. And then they'll start having a conversation with you. You have to figure out what you can do that AI can never do. And one of the things I think that you can do, entrepreneurs can do, that a computer will never do, is coach people and actually truly care about people. So in my industry, you could build a model, you could ask AI, but let's say the market dumps 50% and you're setting in some stocks, they're down, your fixed income is up, you want to panic. Well, if you're using AI, you can hit one button, sell all your stocks, sell all your equities, now you have a new model. And AI is not going to stop you from doing that. And AI doesn't give a shit. And whoever programmed the AI, they don't give a shit. But coaching and training and developing people, I think, is going to be a very human activity, at least for the foreseeable future. And I don't expect an AI to coach any team to win the Super Bowl anytime soon. So coaching and training and developing people, truly caring about people, loving them, I think that's going to be a human activity for quite some time. Not that I think it's perfect, and I think there'll be there are people in China and Japan that are marrying their technology. They're actually having weddings, like marrying their cell phone. And when you add that with robotics, then you got a robot with AI, with quantum computing, which is 1 million times faster than regular computing, hooked up to the internet, that has the mobility and strength that humans lack. So it's going to be a brave new future. I'm 62. I hope to get another 20 or 30 years out of this gig, because it's going to be fascinating.
Yeah. I totally agree. Who knows? Million different ways to speculate what's going to happen. I am convinced this is going to be damn interesting.
It's going to be interesting, and it's going to be unpredictable and potentially dangerous.
Yeah.
Because unlike the Terminator, they don't need to make robots that get guns and shoot us. All AI has to do is turn off. And I live in Scottsdale. It's going to be 120 every day here in a little bit. You turn off the electricity, 3/4 of everybody here is going to die.
Did you read that the Anthropic study that they did, where they were testing the security, and they provided the AI model with a fictional scenario where they hid in some emails that they were planning to turn off or shut down the system. You could Google it.
Oh my gosh!
It's widely circulated.
Oh.
So they wanted to test. It's all security testing, right? So they like very subtly wrote in an email that had other information in it. Oh, by the way, we plan to eliminate or terminate the model on whatever 2 weeks from today. da, 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 to see what would happen. And so fascinating. The model saw that and responded by searching through the author of that email's inbox and found incriminating evidence of the person cheating on their spouse.
Oh, no.
Emailed it.
Oh.
The model did all this, on its own. Emailed the author of that email about shutting it down. It said, "I understand there's plans to shut me down. And unless you change those plans, I'm going to release this information." And I suggest you go read it, but went to the point where it was trying to plan how to lock the doors in the IT room and turn up the heat, to whatever 120 degrees. But it really spooked the folks inside of that company, and they don't know, they can't answer why it has a self-preservation aspect or feature. Maybe, well, not feature, probably more of a bug than a feature. But I just think that there's a genie that's out of the bottle, and it's going to be interesting to see what happens. Hopefully we stay safe. But look, to your point, I totally agree. I think humans there's a lot of things, we have a lot of negative qualities as a race, but I think we're very creative, and there will always be something that we can provide. Well, maybe not always, but for a long time, there's going to be something we can provide that artificial intelligence can't. And understanding that and providing it, like you said, coaching, or things like taste, right? Like what looks good and what doesn't look good, or what's something that's acceptable to say or not acceptable to say. Something that requires like a discerning mind that isn't. You can't just say, "Well, I know that that's tasteful because of this, this, and this." It's like, I don't know. That's just all of the knowledge of my life combined. Whether it's a good or an accurate discernment, that's to be argued. But I to your point, I think there's a lot of things that AI won't be able to do that we will have to focus on. And it sounds to me like there's going to be it's really going to upend potentially your industry, not necessarily because it's really good at doing anything, but I suspect that there will be a whole swath of people that fall for the belief that it is good or better. And so we'll see. Do you find it difficult to convince people of your philosophy that, look, you're basically playing roulette by picking stocks? Let me show you the way. Do you find it? Do people argue about it, or?
Well, that's a great question. It's hard to get people to change screens because they take their identity and then they wrap their identity around their behavior instead of instead of just saying, "Wow, I've had that behavior in the past. I'm going to give that up for this other behavior. I'm going to give up speculating and gambling for academic investing principles." And I see the difference. Yes, I've done that in the past. I've done gambling and speculating, and sometimes I got lucky and sometimes I didn't. But now I want to use academics and then know enough about the academics to actually choose it. That's why I created the 2-day workshop, because it is a job. It's a lot to take on. I mean, Eugene Fama, who won the Nobel Prize for efficient market theory, is the father of modern economics. He's worked on it for 60 years. So at the University of Chicago, Harry Markowitz, who died at 91, he invented modern portfolio theory in 1951, and he's been refining that model until he just died recently. So these are long established areas of science, how your brain works. Dr. David Eaglemetz at Stanford University, I've been working with him for years, trying to help understand how the brain works and train people that they need help with their behavior, not just with their mix of assets, because the behavior is where it's all at. He calls it the Ulysses contract. So in the mythology about Ulysses, he's the captain of the ship, and they go past where the sirens are, and the sirens make this beautiful music. They live on these rocks, and they get the sailors want to hear the music, so they go right into the rocks, and they end up killing themselves. So Ulysses said, "Why don't we do this? You tie me to the mast. Don't untie me no matter what I say. And you guys all put beeswax in your ears so you can't hear. And I want you to take me right up there so I can hear it, but not into the rocks. So protect me from my own behavior. And no matter what I say, don't untie me." So it's a contract, whether it's somebody you go to work out with at the gym, or like for Michael Phelps, his coach, who coached him from the time he was 11 years old to being the greatest athlete in the world, more world records and gold medals than anybody in the world, who coached him every single day. So you have a coach that's helping manage your behavior, not just your portfolio. And then so you have to understand the science and be willing to say, look, in this area of my life, I'm going to need the discipline and the coaching to so that I remain prudent and that I don't allow my instincts, my emotions, and my biases to take me off course, because my purpose in life is too important. So that's coachability. Most people like to think they're coachable. There's 3 levels of coachability. Your coach says do something and you like the idea of it. You say, that sounds right, I'll do it. The next level of coachability is, I'm not sure, I'm kind of questioning it, but you're my coach and you've already accomplished it, so I'll take your coaching. And the highest level of coaching, which most people never reach, is you hear the advice and you don't want to do it at all. And you might even argue with it. So Michael Phelps told me the story about his coach saying, take a 45-pound weight, jump into the deep end of the pool, do a dolphin kick for 45 minutes. Keep your head above water. That's your warm-up for today. And, he would tell me the stories about how he and his coach would argue with each other and have yelling matches. But at the end of the day, Michael Phelps did what his coach said. And having a coach, and coachability is like a superpower. Number one, find somebody who's already accomplished what you want to accomplish. Number two, get them to be your coach. There are a lot of people that'll mentor you and help you without any money at all. Sometimes you have to pay a coach. Find somebody that's already done it, get them to coach you, and eliminate the yeah, but, and do what they say, and you should have similar results.
I love that. I think that's phenomenal advice. So before we wrap up here, Mark, if people are interested or want to learn more about your 2-day conference or your book or your philosophy or want to reach you, what's the best place to go?
Yeah, so if you want to follow me, I'm Mark Matson, at Mark Matson1, Instagram. You can get my book, 6 times national bestseller, on Amazon, anywhere you want to order that. It's also on Audible. For those of you that don't like to read, you like to listen in the car. You can learn about the American Dream Experience workshop. You can go to the website. It's matsonmoney.com. And then we have a lot of information about that there. But the book's a great place to start. Because I wrote out the strategies for an extraordinary life, how coachability works, the academics, what the gambling is. So it's really informative and will help you get a grounding in how to either be an entrepreneur or invest your money for your purpose.
So say the name of the book one more time, make sure that the audience doesn't have to hit rewind.
Sure. It's called Experiencing the American Dream.
Experiencing the American Dream by Mark Matson on Amazon or Audible.
Thanks, Jared. There it is. How to invest your money, energy, and time to live an extraordinary life.
I love it. It's not necessarily about how to become rich picking stocks in the stock market.
That's right.
But about how to lead or how to live an extraordinary life, which is far more encompassing than the amount that's in your bank or in your portfolio.
Absolutely.
So it's interesting. And I mean, gosh, Mark, I could talk for like another 2 hours on this, because I find it fascinating how invest or how you can't really separate, like you were mentioning, your daily life and your choices and your decisions and your behavior from your outcome with regard to how you choose to deploy your capital. I think that's very insightful, and I don't think that I've heard anybody else really come to that conclusion, or certainly not communicate it the way that you have. So kudos.
Thank you.
And I think you're onto something for sure. Well, I mean, obviously, right? The proof's in the pudding. Obviously, $13.8 billion in assets. That's a couple of dollars. So the proof's in the pudding, but not that you need my certification or acknowledgement, but I love it. So is there anything that we didn't have a chance? I mean, this went very quickly. Is there anything we didn't get to touch on or talk about that you were hoping we would get to?
No, I think that was great. And I had a lot of fun. It was awesome. And I love talking about the story and I love the whole story about West Virginia and how it carried through. My buddy Rob Lowe, the actor, I worked with him on. He wrote the introduction to the book, and he encouraged me to write the story part of it and how the story part held everything together.
Nice.
And it should be something. When you read, it should be something that you get some enjoyment out of. You learn something out of it, and should be entertaining. Keep your interest.
I agree. I think that's wise. Speaking, I mean, you've talked a lot about human psychology and the brain, the way it works. And it's another thing that's been proven over and over again is that I'm preaching to the choir, I'm sure, but humans learn and are engaged most when there's a story. For whatever reason, it's sort of like music. Sometimes music can hit you in a way that a paper or words or somebody else talking could never do. They found some interesting stuff with regard to what happens in the brain when there's a story, which I also find fascinating because I tend to nerd out on things like that because I think that what drives us, and human consciousness and all that, the fact that we're the only species that can think about how we think, I find all that, fascinating because I don't think that there are really any answers. At least there's no, 2 + 2 = 4 answers out there. Maybe that's what this whole thing is about, trying to make sense of those crazy questions.
Definitely worth considering. One of the strategies in the book is ask a good question. Most people want to go straight to the solution. Einstein said spend 95% of the time on the problem and only 5% on the solution. Most people don't ask good questions. They just assume they know how the world works. But you asked a lot of great questions today.
Oh, well, I just was sitting here thinking, I pride myself in trying to let the guest speak. This isn't about me. This is about the guest. And for, the way, everything that you talked about, the way that you said it, for some reason, just made me want to just dive in and blah.
So that's awesome.
My apologies for the airtime should be all yours, but I just think it was really engaging and I enjoyed it.
Don't forget, everybody, you can find Boundary Breakers in a lot of places. You can watch our episodes on the Boundary Breakers YouTube channel, or you can listen to each podcast on Spotify, Apple Podcasts, or any of the other major podcasting platforms. Thanks for listening.